What is going on here? Because we are seeing a move higher across the board. Even before the break coming in, we talked about our parent company Comcast with a new analyst out with I think it was a $70 or $75 price target. So explain.
Okay. These stocks were heavily shorted at the end of last year, right? So you had a recipe for short squeeze. Valuations were incredibly cheap relative to the market, and you started to have better news. Cord cutting wasn't as bad as we feared. Advertising was stronger than we feared. And then on top of it all, as Disney has shown, you sprinkle a little bit of streaming magic onto a stock, and you start changing the narrative. And for Viacom, there's Paramount Plus coming, which you probably saw during the Super Bowl, all those commercials, Discovery Plus. And all of a sudden, you have potentially a new narrative forming, which is these companies are not as dead as you may have thought 5-6 months ago.
Okay, so of these companies, and we got them on the screen here, I don't know if you can see them, Walt Disney, Viacom, Discovery, Comcast, Fox. If you could own one, which one do you want to own?
Okay, so we have a buy on Discovery, Comcast, and Fox. And I would say it's Fox. Fox is the cheapest of the group. Fox has two assets that are potentially interesting longer term. They have something called Tubi, which is an AVOD channel like Roku. And they also have a piece of a gambling asset in the UK called Flutter, and they own a piece of FanDuel. So of those five, Fox has lagged the group and has not been seen as a potential streaming winner. And they have earnings out today in about an hour, and we think they're going to be strong based on the fourth quarter.
Let me ask you one question, which is people talk about how quickly the cord is getting cut. You think it's slowing down? This whole idea that some of these estimates take you from 75 million households down to 50 million households between now and 2025. If that's true, what does that mean to the economics of these businesses?
Well, yeah, when I say slowing down, the worst quarter ever was the second quarter of last year, right? When basically you had high unemployment, no sports on, no original content. So many of us looked at the second quarter, which was down like 7%, year over year, meaning you lost on average 5 million subs over the 12 months. And we thought, wow, this is the beginning of a real death spiral. We still think we're going to lose a ton of subs to get to 50 million subs in 5-6 years' time. And basically, you're going to have to quickly transition to over-the-top services to find customers who are outside the bundle. And that's what I think last year was all about. Disney was first in moving aggressively to go over the top. And you're starting to see other companies realize that there's going to be more customers outside of the bundle than in the bundle, right? So the economics of the core linear businesses will not be good. We all know that. We've been saying that for a while now. But the question is, can the over-the-top businesses help slow down the erosion in total of those linear services?
Yeah, but Michael, I wanted to ask you a question because we were talking about Fox, but we'll go back to Fox now, since now I can ask that to you. But so you like it because it's undervalued, but I mean, what's going on? I mean, Viacom's low is 10, it's at 50. Fox has done nothing. I mean, there are things happening at Fox. I don't know whether you've noticed. But I mean, so you like it now, but you got, what's the lawsuit? $2.7 billion, the Smartmatic? What is it? And I don't know what happens with that. I don't know what you think the merits of that suit are. I have no idea. There's a Lou Dobbs unceremoniously thrown out. I don't know what they do at that hour at this point.
Right.
And then you've got a big Fox. You've got, a hole at 7. They're playing around. Well, why do you like it? And what do you really think is going on there?
Okay, so one, we like it because the Fox News Network, 80% of its revenues are tied to affiliate fees, which are contractually, tied revenues.
So they don't need advertising, because advertising is problematic too.
But Joe, if you lined up your advertising revenues at CNBC and MSNBC versus Fox News and Fox Business, you would say, well, if we improve the type of people who are on the air and improve the advertising mix, we could drive revenues higher, right? They've under-monetized because of shows like Lou Dobbs, right? Where they've not attracted advertisers the way that CNBC and MSNBC have, right? So the core of the business is not tied at all to advertising. But I would say what you've seen so far they really undermonetized Joe.
But there's
right?
a reason
And,
there's a reason it's lagged every other media stock, don't you think? I mean,
oh
maybe
my
that
God!
changed.
It's the reverse Trump bump, right? You know,
Well,
Trump.
I don't know. I don't think the lawsuit. There's another machine company out there. Who knows? I don't know what finally. I have no idea. Anyway, I think we got to go.
Shepard Smith here. Thanks for watching CNBC on YouTube.